Welcome to Bloomberg New Economy, lighting a path through the storm. I'm Eric Schatzker. At this year's New Economy Forum here in Singapore, we confronted the world's most pressing challenges, developed action plans to meet them, and explored the possibilities beyond. It was a journey from reckoning to rebuilding to revival. Over the next half hour, I'll bring you the highlights from those 3 exceptional days. Our dynamic and distinguished speakers had much wisdom to share as we emerged from the pandemic, and creative ideas for tackling the burdens of inflation, the misery wrought by Russia's invasion of Ukraine, the dangers inherent in rising U.S.-China tensions, and the wreckage left by scandal after scandal in crypto. Let's begin with Katherine Tai, the Biden administration's U.S. trade representative. One of her priorities is building a new network of economic security ties here in the Asia-Pacific region.
Going into 2023, we are extremely excited. There is a framework that we've created for innovation to create a 21st century framework for 21st century challenges that include very disrupted supply chains and a global economy that is really searching for the opportunity to rebuild confidence, to demonstrate sustainability, resilience, and inclusion.
Do you have any specific proposals that you'll bring to the table when you meet?
Yes, so the Indo-Pacific Economic Framework is not a traditional free trade agreement by design. Trade is one component, but not the only component. So this is economic engagement that includes trade and that goes beyond trade. So we have 4 pillars. First pillar, trade, led by USTR. Second pillar on supply chains. Third pillar on infrastructure and decarbonization. Fourth pillar on tax and anti-corruption. So within the trade pillar, I can go into the components. I think we've got somewhere around 7 to 10 different components. Some of them are quite traditional trade issues. And again, everything is scoped to address resilience, sustainability, and inclusion. So trade facilitation, which is about facilitating the movement of goods across borders. Something that we call good regulatory practices. And as you can see, in terms of naming trade topics, we don't win any awards for marketing or jazziness, but tremendously important in terms of regulatory practices, transparency, notice and comment processes, but also all important disciplines around labor and worker protections, environment sustainability, and the digital economy, which is a novel and emerging area that, frankly, all of the counterparts I talk to are focused on the opportunity that we have right now to be shaping cooperation mechanisms and rules.
We have been a consistent advocate for America to strengthen its economic cooperation and put meat on the framework of the Indo-Pacific Economic Framework, which they have introduced and implemented. It's a framework now, but it needs meat. And that means looking at each of the pillars of cooperation and pursuing concrete projects. And it is happening. The ministers have been meeting for 1 or 2 rounds, and I think there are some concrete projects that are being discussed. So it is promising, and there's something on the table. It's not just talk.
Can the world still rely on the US?
No.
Okay, that's brief.
Short answer. Look, I think the most salient fact of the Trump presidency for allies and adversaries alike is that it happened, right? Which means that everybody around the world, whether you're in Berlin or Singapore or Ottawa for that matter, you have to plan on a much more inwardly focused United States, and not in the way that we've gone through these cycles before.
I agree with you that the salient fact about the Trump administration is that it happened. I am also enough of an optimist to believe that we learned something from that, and that we will build on that. So I would like to believe that we are still a reliable partner, but I think dependence is misguided.
The world now faces a big challenge of defining for itself what its objectives are, and not to be driven entirely or largely by the pressures of the moment. And the goals that I've outlined seem to me attainable. They will be more difficult in the case of Russia than in the case of China, because the basis of a conceptual dialogue has not yet been laid. And that should be the task for our leaders in the period ahead of us.
As I said, if Russia does another referendum, pseudo-referendum that is not acknowledged by anyone in the world, if they acknowledge our territories as their territories, the leader with such position will not be acknowledged by us. Me as a president cannot have any negotiations with him. That's what I said. And they conducted the referendum, and I said there's no point of talking to this person. There's no point. He will not change his policy. This is the occupying policy. He's talking about peace, just like he said, just during the G20, and on that same day, just with this audacity, he launches 100 strikes against Ukraine. What can we talk about? Putin is not one person. These are several people, and there's nothing to talk about with these several people today. If tomorrow they are prepared to take the peace formula, if they are ready to withdraw from our territory, deoccupy Ukraine, and acknowledge that this is a tragedy and not just a mistake, that this is a tragedy of them being aggressors. If they are ready to compensate, or as it is prescribed in the peace formula, if they are ready to accept it, only then we can start thinking about talking to this group of people.
Coming up, more from Singapore, including my conversation with Ken Griffin, the founder and CEO of Citadel. This is Bloomberg. Welcome back to Bloomberg New Economy, lighting a path through the storm. On day one of the New Economy Forum, I had a chance to talk with Ken Griffin, the founder and CEO of Citadel. His thoughts on crypto and the FTX debacle drew a lot of attention, and you're about to see why. We've gone this far into the program, and nobody's talked about crypto. You and I have had a long-running conversation about cryptocurrencies, and every time you were critical of crypto, remember the time you described it as a jihadist call against the dollar? You were pilloried by the crypto faithful. And of course, when Citadel started a crypto trading business, they celebrated your supposed capitulation. So that's the scene setter for the question, folks. What I want to know from you, Ken, is what do you make of the spectacular collapse of Sam Bankman-Fried's FTX?
Well, okay, so big picture. The crypto market cap today is a fraction of what it was when we first started talking about it. So crypto's not front
It was
and center.
$3 trillion, and now it's well under $1 billion.
It's like 800 billion, of which a big part of that's stable coins, right? So you really move back into a world of Bitcoin and Ethereum as the two dominant cryptocurrencies, both of which actually happen to be CFTC regulated. Look, FTX is one of these absolute travesties in the history of financial markets. I mean,
people will lose billions of dollars collectively.
People are going to lose billions of dollars. And that undermines trust in all financial markets.
But was the fundamental problem that it was a business built on cryptocurrency to begin with, or that it was a business that wasn't adequately regulated, or that it was a business that the venture capital and other investors who put money into FTX didn't adequately, diligence? What's the fundamental problem?
Well, I think the fundamental issue...
Or was it just fraud?
So first of all, that's a really big choice of words to use, and I can't go there at this point in time. But what we do know is the balance sheet shows a giant black hole. And there's no doubt that customer assets were used to make investment decisions in favor of FTX's shareholders, which didn't work, at the expense of the customers. That's not permitted in American broker-dealers. You can't just use your customer assets to go engage in proprietary trading. That's a huge no-no.
It's a no-no in most parts of the world.
It's in most parts of the world, and that's a good no-no, to be clear, too. All right? So FTX, billions of dollars have been lost here. The confidence, though, of a generation in financial markets has also been shaken. And that's really awful because the 20-some-year-olds to 40-year-olds who are so engaged in crypto, they've got to save for their retirement. And if they don't believe or trust in financial markets, this is a huge problem. They need to own stocks. They need to own corporate debt. They need to partake in our global capital markets. Now, with FTX, there are a few points here that we should talk about. The turf war by American regulators has got to end. It's just preposterous that, without naming the agencies, they all dance around who owns what, and the bottom line is American investors have really gotten hurt here to the tune of hundreds of billions of dollars in decline in market cap in crypto over the last 2 years. I mean, that really strikes at the entire core or essence of what's investor protection all about. The second is that FTX crosses into a zone that all of us are worried about. On the balance sheet of FTX is a line called Trump lose. And Sam was the second biggest donor to Democratic candidates.
I'm going to leave it to everybody else to draw their own conclusions about what you're saying here.
Right? Those are really, really ugly facts when you see a fraud of this magnitude having played out, and you find no regulators were there to prevent it.
I mean, the crypto industry has been cut to ribbons this year. I think it peaked last November, $3+ trillion. It's just around $800 billion right now. And so what should the industry do to survive and make itself better? My opinion is more collaboration. But the problem with the industry is there's a lot of young people that like antagonizing each other
on Twitter
and lighting each other up on Twitter. And you and I were talking in the green room. I had an old boss at Goldman. He said, your job is to take your 6-shooters and point them out to the enemy. Don't point them on each other. And we do that in this industry, and I think it's a shame. And I think if the industry really wants to grow up, we need a lot more collaboration. I think that there was a red flag, sort of a penalty flag of Sam going after CZ, but also CZ going after Sam. I mean, there was a Twitter spat between the two of them. I think it would be better for everybody if we just sort of calm things down and row in the boat together in synchronicity as opposed to taking the oars and smacking each over the head with the oars.
Without a doubt, there are significant segments of the financial market that live in the shadows, that are not well regulated. We call them non-bank financial institutions. And that is where we are likely to be surprised. And that's what happened in the UK. So as our Global Financial Stability Report showed, that when you do a global stress test for the banking system, advanced economy banks are quite resilient to some very serious downside scenarios. Emerging market banks, less so. So in a very severe downside scenario, which is in the GFSR, we have about 30% of emerging markets who breach minimum capital requirements. So that's a pretty serious event. But I think the real unknown is the non-bank financial system. And that's exactly where we have hidden leverage, where we have, dark corners which come up only when things get really difficult, like we saw in the UK. So that's something that we are worried about. More generally, in terms of the financial conditions at the moment, we see a distinction between, investment-grade assets, which everywhere around the world, but the spreads are quite low. You haven't seen much movement there. But if you look at frontier markets, that's where you're seeing a lot of stress already. We have about 60% of low-income countries that are already in high debt distress, and about 25% of emerging markets. Now, that does not make a systemic debt crisis, for sure. But again, we're in very risky times. Like, the war is not over, the pandemic is not over, and we haven't won the fight against inflation. So interest rates may need to go up much more than any of us would like it to, and we have to see what happens then.
There is a fundamental change, and I think it requires that we look at the issues through a lens that is not driven by forecasts, but by an appreciation of risk and uncertainty, except that the world is uncertain. The central banks misread the signs, or I should say, bet on the wrong side of that range of possibilities a year ago. They misread the risk of persistent and much higher inflation. And the price we now have to pay for that is a recession. The price you have to pay for now accepting that there's a serious risk of persistent inflation and stubborn inflationary expectations is you have to go through a recession. That's the price we pay. But fundamentally, it means that whether it's in central banking or other areas of economic policy making or corporate decision making, that we have to look at the world fundamentally through the lens of uncertainty, accept that things may pan out very differently from what we hope for, and don't just bet on the upside. Don't bet on what we hope to see. Anticipate what can go wrong, prepare for it, try to prevent things from going wrong, and that means a different fundamental orientation. It means investing in advance, not waiting for crises to occur, but investing in advance.
Coming up, more from the New Economy Forum in Singapore, including the CEO of TikTok. Stick around to see Shou Chew explain data safety for his popular but controversial app. Welcome back to Singapore and Bloomberg New Economy, lighting a path through the storm. I'm Eric Schatzker. Elon Musk's takeover of Twitter has dominated the landscape in social media lately. But there's another, more popular app that has attracted scrutiny of its own. TikTok is developing protocols to address U.S. national security concerns. Here's TikTok CEO Shou Chew.
In the future, we are building a very rigorous and robust new model. This is pioneering. And we have internally named this Project Texas. And the way this is going to be done is that we're going to move the data that we store in Virginia and in Singapore into Oracle's cloud infrastructure. That's our partner. Oracle's going to look after it for us. We're going to have new and improved data access protocols such that only an entity of US residents that in the US will have access to a certain set of US protected data. So that's the setup that we're going to have. It's unprecedented. No company has attempted this. It's extremely expensive and difficult to build, but that's the project that we're undertaking at this point.
Almost all of the major screw-ups that we've seen very publicly have been a failure of governance. You know, a lack of a proper board which holds the founders to account, often a lack of scrutiny around secondary transactions, related party questions. And so I think in a very hot market the last couple of years, there were certain people, investors out there who were pushing the boundaries in terms of no governance whatsoever, extremely founder-friendly terms, which they position as helping the founders. But frankly, actually, most founders, the average age of our portfolio company CEOs is 30 years old. And so you want to have some checks and balances.
I think public market prices are so attractive right now that I'm sure a lot of people in the room even have FOMO about not investing.
Well, some of them have FOMO and some of them have already run for the hills.
Exactly. And I would venture to say some have FOMO.
From Beijing's perspective, right, those bans represent not responsible competition, but an existential threat.
A stranglehold.
A stranglehold, exactly. And so, I think one of the critical risks here with these export controls is that China calibrates its response based on the perceived threat, which is existential. And so I think that's one of the factors raising the uncertainty and the factors raising the risk for the international community.
So I think that there will be impact, but the thing that you have to realize, China blew up $50 billion of investment in two semiconductor groups in the last 2 years, Wuhan Semiconductor and Tsinghua Group. Those were self-inflicted wounds. So I still think the self-inflicted wounds made in China 2025 wasn't the greatest idea to publish that in 2016. And they weren't ready for this. And again, the US could have taken the annihilation approach and really hammered them. And they chose not to. That was a very conscious choice not to do that. I think China, with the corruption in semiconductor investments and the things that they're going through, I think they've set themselves back more than this particular program will set them back.
The advance toward modernization for the 1.4 billion Chinese people will also bring greater development opportunities for all countries. We will continue to deepen high-level opening up. Opening up is China's basic state policy. Hence, China will stay on the course of economic globalization, take more proactive steps to expand and deepen opening up in wider areas, and steadily advance institutional opening up in rules, regulations, management, and standards. China will uphold the security and stability of global industrial and supply chains, and work to build an open world economy that delivers benefits to all. We will unswervingly follow the path of peaceful development. Upholding world peace and stability is in the fundamental interest of the Chinese nation. And it is a basic attribute of socialism with Chinese characteristics. China safeguards and promotes world peace through its own development. No matter what stage of development it reaches, China will always stay committed to the principle of equality of all countries, regardless of their size, strength, or wealth. China will never seek hegemony or engage in expansionism, and will always stand up for justice and oppose bullying acts. Dear guests, China and the United States, as two major countries, both stand to gain from cooperation and lose from confrontation. It's both incumbent and imperative for the two countries to explore the right way to get along in the new era. Yesterday, President Xi Jinping and President Joe Biden held their first face-to-face meeting and had strategic communication on China-US relations and other topics of mutual interest. We hope that the US side will work with China in the same direction, uphold the principles of mutual respect, peaceful coexistence, and win-win cooperation, and bring bilateral relations back to the right track. This will benefit not just the two countries, but also the world at large.
That's all from Bloomberg New Economy, lighting a path through the storm. You can find the full interviews and panel discussions from the New Economy Forum at Bloomberg.com and on the Bloomberg Terminal. I'm Eric Schatzker. This is Bloomberg.